ready to purchase a home involves a lot of different people. There's a lot of third parties that's involved in the process, and I'm going to speak on behalf of the lender and team. And I said team because even with me as being your loan officer, I still have a team: processors, loan officer, assistant loan partner, underwriter, that I work along with as well, in getting your deal done for you. So here I am, the lender. Okay. Precious already mentioned to you the steps in the home buying process, and I'm going to talk to you about the step that she talked about, which is the pre-approval with the loan officer. And I say pre-qualification because there's a difference between the two. And also, I'm going to speak to you a little bit about starting the loan process, and this is after you're under contract for a property. Okay. So before I even delve into what I do as a loan officer to get you pre-approved or pre-qualified, there's some terms in mortgage that I want you to kind of be familiar with. And so the first thing that you may hear people talk about is PITI, or sometimes you may hear PITIA. And PITI is just an acronym that we use in mortgage that talks about what is included in a house payment. So know that when I am qualifying you for a home mortgage, I'm not just looking at what the payment, certain house payment. I'm looking at the combination of what's included in the house payment. And as you can see here, that includes the P is the principal, which is the amount of money that is applied directly to the purchase of your property. And then there's the interest that is charged for borrowing money from the bank. There's also the taxes that's involved and that's third party, your property taxes, and sometimes even MUD taxes. So I take into account what your taxes would look like for that property. And then of course your homeowner's insurance. And then I don't have the A here, the PITIA. But the A is the homeowners association. So if you have homeowners association dues, I'm also going to include what your typical payment would be for that. And the reason why I like to include it is because I don't want you to be surprised when you are in a house and then you find out you're paying, say, $2,000 a month for your mortgage, and then at the end of the year you get a $1,500 bill from your homeowners association saying, okay, you got to pay this as well. And then you can see I put private mortgage insurance, or PMI. So depending on your down payment, you may possibly pay a second insurance that goes to your lender, your servicer, or even to the government if it's a FHA loan. And that is the insurance that they charge for putting less than 20% down on a home. Okay, so that is what is included in your mortgage payment. Now, another thing that I'm doing when I am qualifying you for a home is I'm going to consider which program is right for you. We're going to talk about the ins and outs of you go.